6:33 right now. In 2008, when the market began to tumble, the Federal Reserve set interest rates down to 0.25%. Well, since then, that's where we've been sitting.
And now there's rumblings that the Feds may actually increase the interest rate in September. Jenna James joins us now with what that would mean for the housing market. Jenna, good morning.
Good morning, Dave and Cerise. When it comes to buying a home or selling a home, it's probably not something you're just doing out of the blue. In general, it's because of a life change, maybe a larger family or a new job. But when it comes to the interest rates going up, that's probably not going to impact whether or not you decide to buy or sell a home. It will, however, impact your power.
It makes a difference on what somebody can afford. So one interest point can have such a dramatic difference on their payment that that they may not be able to afford the same house or the same quality of house. So there's a little bit of urgency because of the value of home they can afford.
So if you're worried about those rates going up, you may want to act now rather than later. However, after last week's market volatility, some of the voting members of the Fed actually said that it's less compelling now to do that interest rate hike. But Dave, Cerise, as you and I both know, is when it comes to most things with the economy, kind of a gamble either way. If you want to wait, you can only play the game so much.
Yeah, and Jenna, when will we know if the Fed decides to hike this interest rate?
Yeah, Dave, that'll be at the next policy meeting that they're going to have. That's either September 16th or 17th, and that's when we'll know. But right now, it looks kind of split as to what they're going to do.
All right, Jenna James reporting for us this morning. Jenna, thank you.